I think this is the most exciting thing about our business and our industry is you get to, I suppose, surprise and delight people. Maybe people might feel like it's a dull and boring topic, finance, but actually, when you get under the hood, there are so many different instruments that a business owner can utilize when looking or taking on funding. So I'll try go through a kind of a range of different options. We were with a Sage accountancy practice here yesterday that specializes in construction, and so a lot of our a lot of our clients were landlords and very familiar with bridging and buy-to-let mortgages. But one interesting topic I was able to tell her about that was useful for her to go back in is with a lot of our clients being landlords, they are naturally collecting a lot of their income in rent. And we've seen a real growth in financing facilities that will be able to advance your future earnings from rental income coming from your various different properties. So it's a very interesting instrument that buy-to-let or landlords find is a great way to get their deposit for the next property that they want to take on, and something that they didn't realize that they could utilize. You see that kind of traditionally started in the retail and the hospitality industry, where you have the point of sale operation, or now you've got a lot of the e-commerce flowing through, and this has become very, very commonplace. But it's essentially looking at all of that data of what's going through on a monthly ledger and advancing some of that and paying that again out of future sales. One area that's got a lot of modernization has been invoice finance. So invoice finance is been kind of traditionally with kind of industries like recruitment, whereby there's these long debtor days and they're always chasing to get paid. So an invoice financier will kind of look at the whole book and give them a line. But the pain point sometimes is they don't want their clients to know that they're working with a lender and changing the bank account details, and it doesn't feel good. So what we've seen is a real change in that industry, whereby they don't call themselves invoice finance, but it works very much the same. So they analyze the business in terms of the operations, the revenue, and what they do is they apply a credit line against it. So maybe around, say the business was turning over $1 million, they applied a credit line of about 20%. So they've got 200,000 that they can pull from. How they pull from it is they upload unpaid invoices and they get the money straight away, and the unpaid invoice accumulates at a kind of 0.06, 0.07% daily interest until the invoice gets paid back. But the customer doesn't know that they're using a lending facility in the background, and definitely seen a lot of growth in that. One big area I think that's really helped business owners, I kind of look across the way, is a big construction area. So I've got a construction in my mind, but it's very lumpy. And you can have booming quarters or fallow quarters. What that means from a tax perspective is your VAT bills look very different one quarter after the next. So one thing we've really seen is tax funding. How can I spread my VAT bill? So if it's a larger than expected, I might spread that over a 3-month period. The same is true for self-assessment. The same is true for corporate tax. One on the tax side for early stage businesses that I've seen quite well, where they've sent their VAT into HMRC and they're waiting for that to get paid, and it's a big cash windfall for them to get that back. Being able to get that back within 24 hours and using funding for that. I feel kind of touched on the obvious ones like the term loans and the asset finance, but I do think asset finance is always an interesting one, whereby a lot of the traditional sectors will be very familiar with it, like your automotive or your construction, but soft asset finance like laptops, photocopiers, printers, that's really interesting to a young business that's on a growth cycle, whereby it's a big fixed cost when you're hiring 5, 10, 15, 20 people in a short period of time. And one way to kind of mitigate that fixed cost is look at things like soft asset finance, where you could lease a lot of these machinery or pieces of equipment in, so it's really bringing down those fixed costs, so that it's a lot more manageable for those businesses. And then the final kind of, I suppose, one that people may not have heard of is we've a lot of great businesses that are investing in new science, new technology, new processes. So therefore, we're out working and looking for things like Innovate UK loans, EIC accelerators, or doing their R&D tax credits. Once they've shown that they've been able to do this one time, all of that can be advanced. So if they've got an R&D tax credit payment coming up, that can be advanced, and that can be a great unlocker for a lot of those innovation or R&D heavy businesses.